All right, all right, all right. Hopefully, let me switch over. Oh gosh, I never know how to use this thing. I'll turn that off as well. Jeez. Okay. How is everyone? Block, Coinbase, both doing actually very well after hours. Um, I think Apple is to report as well. I haven't even had a chance to look at it. Hopefully, we'll be able to look at that. Maybe they say something about the Apple account, the high interest savings account. That would be a lot of fun, guys. But we're going to be listening to Block Stock probably whenever it comes to their earnings call. I think that'll probably be the one that I want to listen to the most. I'll listen to Coinbase afterwards. Doesn't look like a bad quarter from them. I was just jotting down some of their numbers, putting it into all the spreadsheets, trying to get prepared for you guys for May 15th. We're doing a full launch of all of my spreadsheets. I'm giving you guys all that information, everything like that. So it's a one-time purchase. You'll have everything going forward, every single stock that I cover, and then all the quarters to come. And, yeah. Block is one of them. Coinbase is one of them. Let me jump in and look at some of these. Okay. The only thing that I haven't been able to get for these spreadsheets is the cost of revenue per segment for Block. That's the only thing. Let me go ahead and bring it up though, guys. Okay. No, that's Coinbase. Hope everyone is doing great though. If you guys have positions, congratulations. It was good quarters for both Block and Coinbase, which I think I just want to show off that one as well. It's a nice fintech company, very alternative play if maybe you don't believe in financial markets or something like this. Okay. Why isn't that showing? Boom. Here we are. Scroll all the way up to the top. I was just looking at the numbers. I don't care about the graphics as much. So really easy on the eyes though. So maybe we'll stick around here for now. And also while I'm doing that, I also have to get the call up. Jeez. Okay. Too many things, not enough monitors. It's hectic here, guys. Okay, so Block Incorporated, okay, formerly known as Square, has just released their Q1 earnings, and things seem to be quite positive. Gross profit up 32% year over year. Cash App being the majority of that at 49%. Square only bringing in 16%. Actually, quarter over quarter, though, I didn't even see this. It's lower than the past 2 quarters, all the way back down to Q2 revenue. I guess Shopify is just doing too good. Which, speaking of which, oh my gosh. I just said yesterday, I came out and said that was my largest position, and then it subsequently runs up like 27% during the day. It's by far, not by far, but it is definitely the largest position I have now. I didn't trim it yet. Okay, but net losses actually coming in at some of the lowest numbers we've seen at only negative $17 million. It's still negative, but whenever we look at adjusted EBITDA, we're seeing, breakthroughs, the highest that we've ever seen, up over 89% year over year. I'm also tracking this all on my spreadsheet. Maybe I can just show you guys that because it might be easier to actually consume some of this information. But let me continue. I'm going to read this because I'm reading this just as you guys are. So we delivered strong growth and profitability at scale during the fourth quarter of 2023. Gross profit grew. Okay, is this just saying all the numbers? Paycheck protection program, loan forgiveness, Square gross profit. Yeah, okay, so that's just covering all the numbers that we'll be covering as well. In terms of the Cash App ecosystem, let's see what they have to say. I'd love to see the card numbers. Or I wonder on the call if they're going to talk about Hindenburg. That'll be a lot of fun. I did an amazing call. In March, there were 53 million monthly transacting actives on Cash App. So that is like it's not like what Hindenburg had to say. These are people who, as long as they've made some sort of revenue based transaction on Cash App, okay, so that's an important part. They can't just make an account. It has to be some sort of revenue creating transaction for it to become a monthly transacting active. So very, very exciting that 53 million people every single month are doing some sort of activity on Cash App. I think that was 51 million last quarter. Let me just tweet this out as well. Covering Block earnings call. Cool. Okay. So next, let me see what else we can dive into. Oh my gosh, look at that, eh? Oh, my camera's in the way. Look at that. Continuously increasing on Cash App card attach rates. Sorry, 1 second here. Oh, my screen. Come back. Okay, there we go. Yeah, 38% monthly active card users. So this is really, really interesting for a lot of people that follow me, follow the channel, whatever. Marqeta is the company that covers this. I was just talking with one of the people that talk within this channel, Throwable. He was talking about something along the lines of 76% of the total revenue that Marqeta brings in is just on Cash App, just from activating these cards. Now, they have a actual membership with Cash App that expires this year. There's been no extension that they are going to continue to deal with Marqeta. It's been like it could be what we're hoping, at least in the SoFi community, is that they'll actually choose us, because this is a a business that we can also get into as well. SoFi, it's a large position of mine, one that I cover deeply on the channel. So, yeah, and if anyone knows, SoFi, Jack Dorsey and Anthony Noto were very close. Anthony Noto worked as the chief operating officer for Twitter. So who better than the new CEO of SoFi to actually take over and noticing that there's been no extensions, that's getting people's hopes up. It's destroying the Marqeta stock, but it's getting people's hopes up for the potential that Galileo and SoFi takes this over. Let me see if I can switch this. This might be, yeah, that's way better. Oh my gosh. Not cutting off anything. The Square ecosystem. Let's see why they've been a little bit mixy here. In 2023, we're focusing on 4 strategic priorities to drive Square's business: enabling omni-channel, growing upmarket, expanding globally, and a new priority, integrating generative artificial intelligence. Oh, well, it had to be said, right? Someone had to say AI or else the stock won't go up. So, yeah, congratulations on that. Enabling omni-channel, this is one thing that Square's been able to do very strongly, growing up market, taking over bigger and bigger businesses. Another really good relationship with SoFi. Block Incorporated is actually the payment processor for all of SoFi Stadium, the large, Rams, NFL stadium. I think the number one in the entire in the Americas. It's not actually SoFi Stadium, but it's the naming brand. But Square is the the full payment processor there, so it's a pretty deep market already. When a lot of people think of SoFi, they think of Block as well. So very, very cool. But growing up market might be a little bit harder. Personally, I just like knowing the companies that I track and being a big believer in Shopify. I just don't see them competing. I really like Block because of Cash App, and I think that that's where they should stick. They've got a great thing going there. Square is great too. I mean, they're a large company, but as you can see, they're not growing nearly as quick. Okay. I also need to get this call up here as well. Potentially, wait, give me 1 quick second, just so I can do this as fast as possible. Okay. This is why usually I start at like 445, 450, but I thought because, I wanted to show Coinbase's numbers, I wanted to show Block's numbers, but the truth is I just don't have enough hands. Okay. Where is this call here? Historical financial. Okay, I need that, but that's not why I'm here. Give me the call. Where's the webcast? My okay, offense. I don't know why I'm not going there. Okay, perfect. I got it. We're getting ready here. I'm gonna switch over to look more at the presentation. Maybe we can look at a little bit of Coinbase, follow the stock as well, and then we'll be able to jump in. Okay. You always have to sign in for these things. I never understood why. Like, does anyone actually sign up for the webcasts and stuff? I've never. I've always just put nonsense and then said, register for the event, and then they let you in anyway. So you don't even really, need any of that. Okay. Let me bring back the thing here. I got so much flack on that Apple video saying that Apple is gonna, be a deterrent for large banks and even fintechs like Cash App and SoFi and stuff. Holy, I don't think you guys are seeing what I'm seeing. Um, but to each his own, right? That's what makes a beautiful investing market. If we all thought the same, everyone would just be buying, my stocks, I guess, which I wouldn't mind. I just want to buy it first. Okay. Okay, let me share my screen. Okay, just really quickly, we're not going to stay on Coinbase. I just wanted to look at some of the numbers. Um, this is also why it's running up just for the past couple of quarters. Um, the actual net revenue has been going up. Net losses are actually, down to only 79 million. That's a really, really great sign. It's probably why the stock is up. And adjusted EBITDA actually hit positive again, 284 million. That's probably all in net interest income, by the way, because they were doing that like crazy. Let me see if I can find that. Interest income, called it. Okay. Just a ton of interest income. And this has been the way, since last year 10, 32, 100, 180, 240. That's just, it's unbelievable. It's the market that we're in. Every bank, financial institution is seeing it. This is just for Coinbase, just in case anyone's popping in right now, just looking at it really quickly. So, yeah, interesting stuff. One more thing I just want to take a look at, and then maybe we can pop back in later, is their custodial versus, consumer versus institutional. Yeah, consumer gained a little bit, but not actually as much as I thought. Institutional actually fell quarter over quarter. So yeah, their business is still dying. The business is still dying. They're just benefiting from high interest rates, and good for them. Okay, Apple's is out. Did they say anything about the bank? Let me know. Or not the bank. Sorry, the high interest savings account. I shouldn't call it a bank. I'm going to get more flack. They're not a bank. Okay, they never will be. Jeez. Uh, okay, probably more in focus now. Jeez. Okay. Yeah, gross profit back on block here before the call. 15 minutes away. Cash App inflows. Wow, way. Holy. I wonder what the difference is for this reason. We drove growth in net new transacting actives and strong engagement across products in our Cash App ecosystem. Inflows per transacting active is up 8% year over year, quarter over quarter. Inflows were 61 billion, up 27% year over year. Monetization rate was 1.41%, excluding gross profit contributions from BNPL. Cool. Wow, that's insane. What's a metric that I want them to show off is what's the percentage of their actual gross payment volume that's going through to buy things off of Square. I don't know if they do show that. That would be really, really exciting for me. I love that cross-sell ability. To have a Cash App user buy something off of a Square merchant would be super cool. You know, those are the same things that I look for in Melly and all these companies that we just covered yesterday. Um, okay, generating 135 million in transaction-based revenue based on first quarter of 2023. Yes, but why the huge growth? It's just massive import because banks are failing? Like, is that really like people are just scared of banks so they're going to block? I don't know if that's how it works, guys. But yeah, cool. I mean, massive benefit to them. This is why I think, fintechs are going to take over. Okay. Yeah, Bitcoin gross profit is still growing 16% year over year. I'll have to take a look at that. Let me see. And I haven't finished this chart yet, so bear with me here. But this was just the one part of the sheet that I can show you guys here. There's a couple other sheets for block as well, but this is just easy. Okay, how do I zoom? Okay. So whenever we're actually looking at this, it's broken down into a couple different segments. Oh, sorry. Didn't mean to. Okay. Just for easiness, we'll just show this 1 year. Gross payment volume or gross processing volume, sorry, doing quite well. Dropped a little bit quarter over quarter. See, this is what this segment here is so great for. You can actually see quarter over quarter, year over year, the 2-year compounded annual growth rates, the 3-year compounded annual growth rates. Very, very exciting. Let me see if I can bring that. Yeah, make it even bigger. Come on. Okay. Perfect. And then, same thing for every single line of their business. The only ones that I haven't filled out yet is Afterpay, just because we went live so quick. Cost of revenues I didn't even get to yet, and then all the corporate stuff. However, I got total revenue. But it doesn't auto-populate that quickly, so yeah. Okay. While I'm doing that, I'm just going to make sure that the call is still good. Because we should be able to hear some music or something by now. I mean, you guys won't, but I should be, and I'm not hearing anything. Okay. Let me switch over to full cam for a sec, just so I'm not sharing the goods. Okay, I'm in, but can you guys hear that? Yeah, okay. Cool. Cool. I hope they're not playing a bunch of title music because I'm going to get copyright strike by Block itself just by covering their earnings. Legitimately, Melly did that to me yesterday. So because I was playing, they were playing all that music. They took all the monetization from my video, which was, I don't know, all of $8 or something. So you can have it, Melly. So if I know that they're going into business strategies like that, just copyright striking people and stuff, maybe it's even more of it's a better business than maybe some people expect. You wouldn't believe they even take from their shareholders. So dumb. Okay. Please let me know, guys. I also want to know, help me out in the chat. If Apple says anything about their high interest savings, whether anyone is listening, to the call or not. I won't be, obviously. I mean, probably most of us are going to be listening to the block if you guys are watching the stream. Okay. Let me, before this call, I'll just dive back into it and see if we can get a couple more numbers. Or actually, what I also wanted to do was see the stock here. So Block right now is actually up just a little over 3% on the after hours. Coinbase is up over 7% in the after hours. Yeah. Tons of interest income, but is that actually, sustainable? I don't know. Like, yeah, maybe they even go, net income positive, but that's not going to lead to great long-term returns if something changes in interest rates. So that is still concerning. I'm surprised that it's up 7%, that much just on that piece of news. But Um, with billions of dollars, a bunch of people are going to have different opinions than me. Let me see if I can drop back. Okay, cool. Let me see what the cost of revenue was. Okay, total cost of revenue, but is this per segment? I would love to find it per segment. Um, Actually, let me just read a couple of these. Share-based compensation, by the way, is supposed to slow down a lot year over year. They said that they wanted it. I think they said they were doing like 25% increases. I think or even 40% increases in headcount. That's going to be reduced down to only 10% year over year changes. So I wonder if that's already shown in this quarter, as the difference in stock-based compensation was not that much. Because it's all about survival now. And you know what? Jack Dorsey, especially, I think it's really, really important for him to put his name brand back in this situation where someone like Elon Musk can not just trash on him for his ability to make, such a bloated company like Twitter. And so I think, especially lately, this will also be probably the topic of conversation as well, is how are you going to get costs down but still try to hold up the growth, right? And from the looks of it, they're finding massive success with, the failures that the banks have seen. So congratulations to them. I am a shareholder, by the way, in both this company. I'm a small shareholder in Coinbase, just because that's this is my play for. This is my play if crypto does actually go in. I don't buy a lot of cryptocurrencies or anything like this. I use a little bit of USDC to actually, pay my editors and stuff like this. But aside from that, I don't really use it. Okay. Let me get off this. Let me go back to here. This is where all the fun is lying. Okay, so I wanted to read this as well. Growing up market. We continue to experience strong growth up market. Gross profits from our mid market sellers was up 19% year over year in the first quarter. Yeah, that's okay. You said mid market. Where's the top end guys, huh? Like that's the funniest thing too, is like even 500K plus of annualized gross processing volume is not even that much. Like this is their top rung. If you compared that to like a Shopify and stuff, you'd be comparing against companies that are doing 10 million in annualized gross processing volume, or even higher for their high rungs. You know what I mean? Especially whenever it comes to some of the newest products that they've been pushing out. And that's really where I think a ton of the market is going forward for e-commerce. A lot of people know that there's a ton of options, whether it's Wix or WooCommerce or Shopify or Squarespace or Square. There's a ton of options for small players. It's the big players. Who's going to get the Louis Vuitton subscriptions going forward? And I just don't think Square is the player to do so. Could be wrong. Could be wrong. I think what, Square has shown themselves to be an amazing player in the point of sale terminals. I think they're beautiful, super 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 good, way ahead of Shopify's in my opinion. I think Shopify's point of sale technology kind of sucks. They're using third party stuff for the longest time, just started building their own, and they all look like crap. And I know that like the looks are not the most important thing. You want the the processing power to be good, but you want both. You know what I mean? Okay, integrating generative AI. Though we've launched features leveraging machine learning and generative AI in previous years, we've doubled down in 2023, incorporated these strategic priorities for all Square product teams. In March, we launched suggested actions in Square messages, which use a large language. Okay. Like in any other business, if AI was not such a hot topic right now, Suggested actions in Square messages would not even be brought up at all. That's such a non like yeah, that's a nothing. Okay, but good for them on launching that. AI powered suggested replies. 400,000 sellers have accepted and sent more than 1 million suggested replies and actions. We've also launched AI generated item descriptions as part of Square's for retail item creation flow. Well, you know what? That's a little bit better. That's more 2022, 2023. But custom buttons for replies are like, what do you want to talk about? Product troubles, shipping, deliveries, my account. that stuff was out for, for years. Sent more than 1 million suggested reply actions. Wow, that's awesome. I sound so negative, but it's just like I hate this. The force to say AI. That's my only problem. I mean, obviously they're growing, and these products need to come out. But like, if it wasn't such a hot topic, it wouldn't even be in their their Q1 shareholder letter. So that's sort of my problem with this. Expanding globally, I also want to see. We launched Square Loyalty and Square for restaurants in Japan, providing food and drink sellers with integrated solutions focused on operating more efficiently, delivering better hospitality to their guests, and growing their businesses. We also introduced our kitchen display system in the country, allowing sellers to streamline orders via digital tickets. In the first quarter, gross profits in markets outside the US grew 43% year over year and represented 16% of Square's gross profit. Wow. I mean, that's expanding. And you know what's crazy is it has been some of their largest markets is their actual international markets for Square. So, I mean, that is really positive. But the amount of countries that they've been able to expand into, maybe some of you guys will know this. They touted how they expanded into this small, very, very southern island. I forget it. I think it was a British colony. I could be wrong, but maybe someone will say it in the chat. And I just think it's like I don't know if they're ready for the big time scale quite yet. And I mean, obviously they're not, or else they would. But it's how long to deliver these things. And whenever you combine the gross profits like this, it can look like, the growth is amazing. And it is. I mean, like Cash App is doing phenomenally. And I hope that they continue to focus on Cash App rather than Square. Because if quarters like this continue, we're going to actually start seeing, negative year over year numbers, which could be very, very close to happening considering this is already, 2 quarters lower than what we saw. So as quarters move on, the number will continue to rise, and then the comparable number, which will be the Q2, Q3, will be lower and lower if that's going to be the case. Maybe they speak on that, but from the looks of it, I would be addressing it very quickly as to why there was some shrinkage. Now this could also be a cost thing. Maybe they are growing in terms of a revenue basis, but something has changed in their costs. I could also look at that once we actually get segment revenue. Maybe it's in here. Yeah, see, look, that's not even a cost of revenue issue, which I don't even have the number for. Was shrinking though from Q3 to Q4. I'll have to get that number. I forget where I used to get it from segment wide. But whenever it comes to total revenue, that did drop not only this quarter, but for the past 2 quarters, dropping total revenue. Not exactly what you want. The problem is that hardware revenue was a good explanation to why, from Q3 to Q4 that these numbers actually dropped. The difference is that that's not the case from Q4 to Q1, right? It actually gained 5%. It was the negative 7% in the subscription and services revenue. That's a little bit more concerning. A negative in transaction volume, where the opposite is actually happening in Cash App, right? Transaction volume up 10%, Bitcoin revenue up 18%, total revenue up 14%. I should also add a category here for excluding Bitcoin, because we don't want that in the revenue segment. We only like that in the gross profit. Oh, Call is on, ladies and gentlemen.
I'd now like to turn the call over to your host.
Give me 1 sec.
Nikhil Dixit, Head of Investor Relations. Please go ahead.
Hi, everyone. Thanks for joining our first quarter 2023 earnings call. We have Jack and Amrita with us today. We will begin this call with some short remarks before opening the call directly to your questions. During Q&A, we will take questions from our customers in addition to questions from conference call participants. We would also like to remind everyone that we will be making forward-looking statements on this call. All statements other than statements of historical fact could be deemed to be forward-looking. These forward-looking statements include discussions of our outlook and guidance, as well as our long-term targets and goals, and we may decide to shift our priorities, move away from these targets and goals at any time. These statements are subject to risks and uncertainties. Actual results could differ materially from those contemplated by our forward-looking statements. Reported results should not be considered as an indication of future performance. Please take a look at our filings with the SEC for a discussion of the factors that could cause our results to differ. Also note that the forward-looking statements on this call are based on information available to us as of today's date. We disclaim any obligation to update any forward-looking statements except as required by law. During this call, we will provide preliminary estimates of gross profit growth and GMV performance for the month of April. These represent our current estimates for April performance, as we have not yet finalized our financial statements for the month of April, and our monthly results are not subject to interim review by our auditors. As a result, actual April results may differ from these estimates and may not be reflective of performance for the full second quarter. Moreover, this financial information has been prepared solely on the basis of currently available information by and is the responsibility of management. This preliminary financial information has not been reviewed or audited by our independent public accounting firm. This preliminary financial information is not a comprehensive statement of our financial results for April or the second quarter. We will also discuss combined company gross profit during this call. Block combined company gross profit assumes we acquired our BNPL platform on January 1, 2022, and includes a $51 million gross profit contribution from our BNPL platform for the month of January 2022. For purpose of comparison, fourth quarter combined company gross profit assumes a $185 million contribution to Block gross profit from our BNPL platform in the fourth quarter of 2021, as if we acquired our BNPL platform on October 1, 2021. Also, we will discuss certain non-GAAP financial measures during this call. Reconciliations to the most directly comparable GAAP financial measures are provided in the shareholder letter, historical financial information spreadsheet, and Investor Day materials on our investor relations website. These non-GAAP measures are not intended to be a substitute for our GAAP results. Finally, this call in its entirety is being audio webcast on our investor relations website. An audio replay of this call and the transcript for Jack and Amrita's opening remarks will be available on our website shortly. With that, I would like to turn it over to Jack.
Thank you all for joining us. Last quarter, we shared our investment framework going forward. As a reminder, our framework can be articulated in a single sentence. Block in each ecosystem must show a believable path to gross profit retention of over 100% and Rule of 40 on adjusted operating income. The principles that led us to this framework were, number one, ensure our investments are focused on customer retention and growth. Number two, account for ongoing costs of the business, including stock-based compensation. And number three, utilize industry standard conventions that are simple to communicate and understand. We will not be distracted from living up to these principles and building our business according to this framework. Obviously, there are challenges ahead, including many out of our control. I wanted to spend a moment talking about those so you're aware of how we're thinking about meeting them, and then hand it over to Amrita to discuss our quarter. I'll start with the macro challenges and then the prevailing trends we can use to advantage our customers and us. There are three macro challenges affecting all businesses now and over the long term. Number one, constant state of global crisis. Number two, regulatory fragmentation. And number three, global financial system shifts. The world seems to be moving from one global crisis to the next and suffering from an overwhelming amount of information, which is causing people and organizations of all sizes to be distracted and reactive to the moment. From COVID to inflation to the war in Ukraine to bank failures, the number of things we all need to pay attention to grows unbounded. Throughout this time, we want to remain focused and not reactive to any one particular moment in time. This is easier said than done, but it's something that underlies everything we do, ensuring our long-term view guides all of our actions, especially those we take in the short term. At the same time, regulators around the world are coming up with slightly or entirely different answers to problems facing their citizens. Instead of having global standards, we end up with rules which are different for every market, effectively slowing the pace of development. While this might be a good thing for each market, it makes it very challenging to grow a global internet business, especially for smaller companies. Part of our job will be to help our customers navigate this complexity by taking it on ourselves. Finally, there have been numerous challenges to the global financial system, and it's experiencing some significant shifts. From new global reserve currency candidates, centralization of banks through failure of smaller ones, to adoption of central bank digital currencies with entirely new capabilities. These all affect our core business and are all trends we need to navigate carefully. I'm confident we will, as we see and acknowledge them early. We want to be proactive in our approach and not just react when it's too late. And there are a few technology trends that I believe will help us do just that. There are 3 trends we're focused on. Number 1 is artificial intelligence. Number 2 is open protocols. And number 3 is the global south. Consider how many times you've heard the term AI or GPT in the earnings calls just this quarter versus all quarters in history prior. This trend seems to be moving faster than anyone can comprehend or get a handle on. Everyone feels like they're on their back foot and struggling to catch up. Utilizing machine learning is something we've always employed at Block, and the recent acceleration in availability of tools is something we're eager to implement across all of our products and services. We see this first as a way to create efficiencies, both internally and for our customers. And we see many opportunities to apply these technologies to create entirely new features for our customers. More and more effort in the world will shift to creative endeavors as AI continues to automate mechanical tasks away, and we believe we are well positioned for that shift with our strategy for artists on title. Open protocols represent another fork in the road moment for people and companies. Bitcoin, Nostr, Blue Sky, Web5, and others are all working to level the playing field for competition and give individuals and organizations entirely new capabilities. I believe this trend is growing as fast as AI, will have just as large an impact, and may even help address some of the harms AI presents. We are embracing this early so we can figure out how to best contribute to these protocols and build valuable businesses on top of them. This isn't just about centralization versus decentralization. If these protocols are even remotely successful, they will present a customer base far larger than any one company can create alone. And there is good precedent for this happening again. Look at the web, email, and the overall internet for proof. We have a number of efforts towards this trend, including our Bitcoin wallet, miner, Bitcoin exchange, Spiral, and TBD. If we consider where the internet population will grow the fastest, we must look at the so-called global south, countries within Africa, Latin America, Asia, and Oceania, where most of humanity resides. This region is adopting open protocols faster than Western countries because the use cases they provide are increasingly becoming a necessity, such as money remittance. We are choosing to focus on these markets because we believe the total addressable market over time is bigger than anything we're currently in. The assumption you have to make here, of course, is that nearly everyone in these markets has access to the internet, which is a credible one to make over the next decade. We have already started this work in earnest, and with our partnership between TBD and Yellow Card to enable fiat on and off ramps in 16 African countries. Open protocols and focused AI solutions will help us to move even faster and in a way that's complementary to the businesses that already exist within these markets and the ones starting up in the future. I realize this is a lot to take in, but I want to make sure you all had the context for how we will be driving our roadmaps and businesses in the future. With our investment framework, we will have the right accountability as we look to grow Block's many ecosystems together. Together is the key word here, as our real value comes from our multiple ecosystems working to positively reinforce one another and provide resiliency through challenging times. I couldn't be more excited about what's ahead and how we're positioned as a company to grow. Over to Amrita.
Thanks, Jack. you've now heard 3 of the longer-term trends we are prioritizing in the coming years to expand our market opportunity and help advance our ecosystems. As we pursue these opportunities, we'll continue our day-to-day focus on serving our customers, operating with discipline, and driving long-term profitable growth at scale. There are 3 topics related to our more recent performance that I'd like to cover today. First, an overview of our strong first quarter results. Second, trends we've seen across our business in April. And third, a look at our investments through the remainder of the year. In the first quarter, we delivered strong growth across our ecosystems with gross profit of $1.71 billion, up 32% year over year. On a combined company basis, gross profit grew 27% year over year in the first quarter, up from 21% in the prior quarter. We delivered adjusted EBITDA of $368 million during the quarter, an increase from $195 million in the prior year period. Adjusted operating income, which includes expenses related to stock-based compensation and depreciation and amortization, was $51 million in the first quarter, up from a $42 million loss in the prior year period. We also continued to diversify our monetization streams across our ecosystems. In the first quarter, we had 14 revenue streams across Square and Cash App that generated $100 million or more in annualized gross profit, up from 11 a year ago. Let's get into each ecosystem. Cash App generated $931 million of gross profit in the first quarter, an increase of 49% year over year. On a combined company basis, Cash App gross profit grew 43% year over year, up from 39% in the prior quarter. We delivered year-over-year growth across each component of our inflows framework: actives, inflows per active, and monetization rate. We reached 53 million monthly transacting actives in March, an increase of 17% year over year. Inflows per transacting active averaged $1,136 in the first quarter, up 8% year over year and quarter over quarter. And overall inflows into Cash App totaled $61 billion, up 27% year over year. We remain focused on driving growth in inflows per active by growing product adoption, diversifying the ways in which people can bring their money into Cash App, and investing in areas that strengthen trust in Cash App. Monetization rate was 1.41%, excluding gross profit contributions from our BNPL platform, up from 1.19% in the first quarter of 2022, benefiting from growth in monetized products and pricing changes implemented in 2022. On a quarter-over-quarter basis, monetization rate was up slightly from 1.39% in the fourth quarter, including a modest benefit from interest income. Our financial services products are a key driver of inflows into Cash App and help us build retentive relationships with our actives, particularly Cash App Card. In March, there were 20 million monthly Cash App Card actives, up 34% year over year. And average spend per active increased on a year over year and quarter over quarter basis. In March, we had 2 million monthly direct deposit actives, 1/10 the scale of Cash App Card monthly actives. In particular, paycheck deposits continued to increase as a percentage of overall inflows, totaling $2.5 billion in March, or $30 billion on an annualized basis. These paycheck deposits grew 69% year over year, 2.5 times as fast as overall inflows into Cash App. We've driven adoption for direct deposit actives through unique boosts, and more recently, we've introduced free in-network ATM withdrawals for those receiving their paycheck in Cash App. We also launched Savings on Cash App earlier this year, which was a top requested feature amongst our customers. This gives customers a simple and flexible way to manage money and easily set aside funds as a separate savings balance. Since it launched in January, more than 3 million savings actives added funds to their savings balance as of the end of April. Square generated $770 million of gross profit in the first quarter, an increase of 16% year over year. On a combined company basis, Square gross profit was up 12% year over year, and further, excluding gross profit from PPP loan forgiveness, Square combined company gross profit grew 21% in the first quarter, up from 16% in the prior quarter. Looking at the drivers of Square's first quarter performance. First, we continue to drive growth in software and integrated payments, with gross profit from these products up 19% year-over-year. Within this, we've seen strong momentum from our vertical point-of-sale offerings across retail, restaurants, and appointments, where gross profit was up 42% year-over-year in aggregate. By channel, gross profit from in-person channels grew faster than our online channels, as we've seen online growth rates normalize compared to pandemic levels. Second, we continue to grow with larger sellers. Gross profit from mid-market sellers was also up 19% year-over-year. We remain focused on driving acquisition of larger sellers across our three key verticals of restaurants, retail, and beauty, and our software offerings for those verticals. We recently introduced vertical-specific homepages on our website that offer customized experiences to sellers. The updated website funnels demand to our sales team, which we are also verticalizing in order to further support our go-to-market efforts. Third, we continue to expand globally. Gross profit in our international markets outpaced overall Square gross profit, up 29% year-over-year, excluding contributions from our BNPL platform. We remain focused on Square's top strategic priorities of omnichannel software, upmarket, and global, and have been orienting our roadmaps and investments towards these areas of meaningful growth in recent years. These priorities have helped us proactively evolve our business mix from our roots in sidecar payments, or transactions where sellers enter an amount on a keypad and hit charge, towards software and integrated payments, which enable us to create more retentive long-term relationships with sellers. As a result, Square's gross profit from sidecar payments grew 5% year-over-year and represented 21% of Square gross profit during the first quarter, down from 30% 2 years ago. We intend for the mix of Square's business related to sidecar payments to continue to decline over time, as sidecar use cases are now also well served by peer-to-peer solutions, such as Cash for Business within our Cash App ecosystem. Finally, our BNPL platform generated $5.6 billion of GMV in the first quarter, an increase of 18% year-over-year, inclusive of January 2022 volumes. Losses on consumer receivables were 0.7% of GMV, an improvement year-over-year and quarter-over-quarter. Next, an update on April trends. For the month of April, we expect total gross profit growth of 24% year-over-year, which we expect to remain relatively consistent for the second quarter. Looking at the dynamics of each ecosystem, for the month of April, we expect Cash App gross profit to grow 35% year-over-year, a moderation compared to 43% combined company growth in the first quarter, as we have lapped the benefit of pricing changes made in the first quarter of 2022. We expect Square gross profit to grow 14% year-over-year in April, compared to 12% combined company growth during the first quarter, as we lap the more meaningful PPP benefits from the first quarter of 2022. Excluding PPP, combined company gross profit for Square is expected to be up 16% year-over-year in April, consistent with the fourth quarter's 16% growth, and moderating compared to the first quarter's 21% growth. While first quarter growth benefited from lapping Omicron in the prior year period, April trends were in line with the fourth quarter, which is when we started to see a moderation in processing volume growth, particularly in discretionary verticals. For our BNPL platform, we expect year-over-year GMV growth of 20% in April, an improvement from 18% in the first quarter. Turning to our expectations for the remainder of the year. Given the gross profit momentum in our business during the first quarter, we are increasing our expectations for profitability this year. We expect to deliver adjusted EBITDA of $1.36 billion and adjusted operating loss of $115 million for the full year 2023. This primarily incorporates stronger top-line outperformance during the first quarter, as we intend on shifting some expenses that we had intended for the first quarter to later in the year. We remain focused on operating with efficiency in 2023, driving operating leverage across hiring, sales and marketing, and corporate overhead. For the full year, we continue to expect margin improvement year-over-year on both an adjusted EBITDA and adjusted operating income basis. Shifting to share-based compensation. Last year, in the second quarter, our share-based compensation expenses increased by $47 million quarter-over-quarter, when excluding a one-time SBC expense of $66 million related to the acquisition of Afterpay, recognized in the first quarter of 2022. We expect a similar quarter-over-quarter increase in the second quarter of this year. This remains an area on which we are focused and expect to drive greater leverage over time. I'll now turn it back to the operator to start the Q&A portion of the call.
The floor is now open for your questions. To ask a question at this time, please press star 1 on your telephone keypad. If at any point you'd like to withdraw from the queue, please press star 1 again. We ask that you limit yourself to one question, please. We'll now take a moment to compile our roster. Our first question comes from the line of Tien-Tsin Huang from JP Morgan. Please proceed. Your line is open, sir. Please go ahead.
Hi, great. Thanks. Hope you can hear me okay. I appreciate your opening comments, Jack, on constant crisis and your thoughts on long-term trends here. But I want to ask about the near term, if you don't mind, because we've fielded a lot of questions on the short report earlier and now get a lot of questions on turmoil in the banking system. So I'm curious if these, let's call them challenges, change your near-term priorities or strategy in any way in 2023. And want to also ask, just from a risk management standpoint, how do you think about benchmarking your investments and governance and compliance and things of that nature versus peers? Thanks.
Yep. So I'll take the first part of this question. I would say that we stand by our response to the short report. We will not be distracted from our strategy and from our prioritizations. We have a pretty compelling roadmap ahead of us in every one of our ecosystems, and we, as I said in my opening remarks, we think it's really important to focus as much as possible on that, despite what's happening around in the macro. And as you mentioned, there's a lot happening, obviously, in the financial industry and finance larger. And being able to acknowledge those, take them into account, and make sure that we're building appropriately according to what our customers need and what our customers want, and growing that customer base is the most important thing to us. We also want to make sure that we continue to build trust. And as I've talked about before, trust is earned in many ways. It's through transparency, through reliability, dependability, and that is all something that we earn. We're not given, and that comes over time. And a lot of that has to be focused on how our customers ultimately trust us, how our partners, including our banking partners and our regulatory regulators, trust us as well. So this is a significant focus for us and always has been. It has to be as you do anything in the financial space. It's certainly always been part of our mindset and our approach. And turn it over to Amrita to talk about benchmarking against peers and more broadly investment.
He said absolutely nothing.
Yeah, thanks for the question, Tien-Tsin. You know, Block operates a business that is highly regulated, and our goal is ultimately to expand access to the economy through intuitive financial products. In order to do that, we must maintain a culture of compliance and responsible risk management, including through investment in programs, processes, controls, and teams with deep compliance expertise. Prioritizing compliance ultimately helps us drive trust with our customers, with regulators and external partners, and that enables us to then develop innovative products responsibly. We have significantly grown our investment in compliance over the last few years. At a company level, we expect to invest approximately $160 million in compliance in 2023, which represents an increase in our investment dollars of more than 5 times since 2020, outpacing OpEx growth by approximately 2 times during that same period. Specifically within Cash App, the pace of growth on compliance investment has been even faster than that. You know, with regards to how you might benchmark that, other companies may calculate compliance investment differently, so it can be hard to benchmark across companies. What we include in these figures is investments that go towards personnel, as well as software and tooling, amongst other areas to support our program. These dedicated compliance resources support our business units and our customers that our business units serve, and ultimately provide oversight across the ecosystem. Maybe just to very quickly handle, you also asked about banking, sort of banking crisis in our partner ecosystem. Look, we benefit from having a diverse ecosystem of products and services with diverse business models, as you heard, now with 14 revenue streams at $100 million or more in gross profit, up from 11 a year ago. Across our products and our partners, we are always focused on building redundancies wherever we can, in addition to assessing potential future risks. So we have a diverse set of products, and we build redundancies where we can, and we have a transparent approach to our partnership, as we always have.
They kind of already covered that in their short report response, but still good that they said it.
Our next question comes from the line of Tim Chiodo from Credit Suisse. Please proceed.
Great. Thank you, everyone. I want to touch on the verticalized offerings in retail, restaurants, and beauty. They are the key to moving up market. They were a focus at the Investor Day. I know they're in the letter, and you touched on it earlier, but specifically for those three, if you could talk a little bit about the investment you've made behind the product specifically, and then on the distribution, you mentioned the call to action on the website and how that's changed and drove more leads for the larger sellers. But maybe you could also talk about maybe the next steps around the feet on the street salespeople that will also support the vertical offerings.
Yep, I'll start this off. So the key differentiator to our mind is, our ecosystem of tools, and it's not just about any one particular vertical, but how everything works together ultimately. We have over 30 products, including some vertical specific software and a developer platform, which if our customers don't find the tools they need in our platform, they can always build their own or hire a developer to do the same. And we also see, because of that, we see a lot of growth in upmarket because we provide flexibility for folks. In terms of our vertical software, our solutions addressing key verticals of restaurants, retail, and beauty allow us to serve much more complex sellers with very specific needs, which again goes back to that flexibility point and the strength of our ecosystem. And the developer platform continues to be stronger and stronger as we move forward. In terms of just the investment behind products, I can talk about go to market actually a little bit. We're constantly looking for refinements for how we think about rolling these tools out, including the website. And that first time that someone sees Square, this is inclusive of sales, this is inclusive of our direct marketing. And this is something that is never done in terms of having a final point. It's just a constant iteration. And we're really excited to always take a fresh look at how to improve this and make it better.
And I'll add, Tim, just a couple of data points to help frame up the response. So in the first quarter, as we look at this broad set of mid-market sellers that we can serve and the specific solutions, we see outsized growth in those areas around vertical points of sale and developer solutions. So mid-market sellers overall up 19% year over year in the first quarter, outpacing our blended Square gross profit growth rate of 16%. And our strong growth in our vertical points of sale growing at 42% year over year, with gross profit growth from our developer tools also outpacing overall Square gross profit growth. This is a large TAM that we're addressing here with upmarket and with our vertical points of sale. We believe that we're less than 1% penetrated in the larger seller opportunity just in the US based on gross receipts alone, which is why we're making the investments and doing the hard work on verticalizing our sales force and our go-to-market efforts. So to contextualize that a little bit, we've pulled back meaningfully on Square sales and marketing investments year over year as we optimize channel mix and refine our operations in the first quarter. And we're seeing positive growth in acquisition, even as we've pulled back on spend. Within sales, the work that we've been doing is continuing to shift to a verticalized software-led sales team. We've now implemented this with our US inbound sales team, which is verticalized, and over the next 2 quarters, we're going to be doing that with our US outbound sales team. It's early here, but we're seeing encouraging improvements in the efficiency and productivity of our sales reps. From a website perspective, we recently redesigned the Square website, allowing our sellers to select vertical-specific experiences, cater to the products needed to run their businesses, and to direct sellers to our sales team, making it easier for both existing and prospective sellers to contact support. And again, it's early, but we've seen strength in overall acquisition as well as new lead generation for sales since introducing our new homepage. These are long-term initiatives that we're continuing to work on, and we expect them to drive results over the coming years as we continue that work.
Thank you, Jack and Amrita.
We have Dan Chapman dialing in to ask a question. Your next question comes from the line of Dan Chapman. Please proceed.
Hi, Jack. Thank you for taking my question. My name is Dan, of course, and I use Square to run operations for a couple of businesses, a craft beer and pizza restaurant we call A.W. Wander, and a 105-year-old movie theater called the Manlius Cinema. I've been a Square seller for about 6 years now, and I currently use Square Point of Sale, Square Online, gift cards, loyalty, and a few others. When the pandemic struck, we were forced to quickly pivot our business model and set up an online store within 2 days. And I always credit Square for giving us the tools we needed to be flexible in the moment. Now, business owners like myself must adapt again as we face economic uncertainty. My question is, how can small business build resilience and really set ourselves up for success in this current climate?
Yeah, thank you. Thank you for using Square, and thank you for the question. I've spent some time with this. I would say that the biggest lesson I've learned in building our business is just the importance of having really good and clear data about how your business is doing, and making sure that you can pair that and kind of look for patterns elsewhere, whether those be patterns within your own community, your town, your city, against other competitors. To me, that's the only way to really inform decisions in order to create resilience, especially in more challenging times. Making sure that you are looking for opportunities to convert more customers to recurring, and ways to get them to keep coming back and constantly sponsor you, which again continues to seem to get harder right now. But I think there's a general trend, and I think the trend will continue to more and more local, and less about global answers. And I think small businesses are set up extremely well for that, and we're really happy to support in every way that we can that effort and that trend. And hopefully, we're doing the right work by making sure that our tools just work together, and you don't really have to think much about adding an entirely new system like customer relationship management or subscriptions or moving to an online business. You just press a button and it's done, so that you can really focus on the core fundamentals of your business by looking at the data and making informed judgments around it. So we'll continue to improve our dashboard, where hopefully you're seeing a lot of those metrics and information, and enable more and more actions and activities that you can make based on that insight and data.
That's great advice. Thank you. Really appreciate it.
Thank you.
Our next question comes from the line of Lisa Ellis from MoffettNathanson. Please proceed.
Hey, good afternoon. Thanks for taking my question. I wanted to focus in on Cash App gross profit growth there. You said on a combined company basis, up 42%, again, up from 39% in 4Q, so an acceleration, another quarter of really extraordinary growth. Can you just help disaggregate a little bit where you're really seeing that acceleration in growth and how you're thinking about the sustainability of it going forward? For example, continuing to diversify Cash App's revenue streams, et cetera. Thank you.
Thanks so much for the question, Lisa. I can start us off here. I would look at unpacking Cash App's performance according to our inflows framework, where we have seen strong growth in each of the three variables that ultimately ladder up to gross profit, whether it's actives, inflows per active, or monetization rate. So if we look at Q1 growth, monthly transacting actives were 53 million in March, up 17% year over year. This is really driven by both the virality of our peer-to-peer network effects as well as increasing focus on leveraging marketing and acquisition tools to drive qualified new customers and higher product adoption over time. We've been targeting, using marketing, new and higher value audiences while also remaining disciplined in how we deploy those funds to ultimately see returns. From an inflows per active perspective, at 1,136 in the first quarter, this is an increase of 8% both on a year-over-year and quarter-over-quarter basis, where we've been encouraged by the healthy trends we see here. The key drivers of inflows per active are really around product adoption, where we continue to see strong adoption of products like Cash App Card, now reaching 38% of those monthly transacting actives at 20 million Cash App Card customers actives in our March timeframe. And with strong growth in spend per Cash App Card active as well, underpinning the overall inflows that we see growing in the overall Cash App ecosystem. So this product adoption on critical products like Cash App Card leads to greater activity on our platform, stronger engagement, and ultimately inflows per active. Another key piece of that is increasing the ways in which customers can inflow their funds into Cash App over time, which can lead to incremental volumes as we've seen in the past, for example, with things like our paper money inflow channel. Finally, on inflows per active, a key driver that we'll be mindful of as we move forward is the mix shift of our customer base. As we target a younger audience and see success with Gen Z or with our families product, there could actually be some pressure on inflows per active over time, as those customers are likely to have lower inflows per active earlier in their financial journey, but we'd expect to see that grow over time as they become the earners and spenders of the future. Even with that mix shift, we've continued to see strong growth on inflows per active. And then the third key driver, of course, for Cash App is monetization rate, which also grew strongly year over year, given the pricing changes, and more moderately quarter over quarter on the back of some interest income benefits. Ultimately, as we look forward, as you noted, in the first quarter, combined company growth rate of about 43% for Cash App. What we saw in April, or expect to see in April, was about a 35% year-over-year growth rate. This is as we expected and as we shared on our last earnings call, now that we're lapping pricing changes that we instituted in the first quarter of 2022, but still strong growth at 35% year-over-year in April. Final thing to note here is, of course, margin expansion for the Cash App business. Again, as we noted last quarter, we expect to see this year Cash App to not only grow strongly, but continue to see operating leverage in the Cash App margin as we continue to operate our business with discipline and continue on the path that we've been on for a few years now with Cash App and growing our margins.
Thank you.
Our next question comes from the line of Darrin Peller from Wolfe Research. Please proceed.
Hey, thanks, guys. Look, GPV growth was obviously strong in the quarter, and it was good to see the spread versus the industry hold up well. I think you talked about 14% gross profit growth into April for Square. If there's any comments you can give us on volume growth into April or May versus the 17%, that'd be really helpful. And then, more importantly, I think just revisiting the key drivers of the GPV and the seller or the Square business overall, differentiation and the sustainability. International obviously was up over 40%. So maybe you can comment on that together with e-com and some of the other drivers that we've been seeing and your view of sustainability. Thanks again, guys.
Thanks for the question, Darren. I'll start us off. So, look, overall, as we think about the health of the ecosystem, I'd orient you more to gross profit than GPV as we look at our performance. Let me start there. With gross profit in April at 16% year over year. This is on an ex-PPP basis for comparison purposes. The comparable figure was 21% in Q1, where obviously we had a more favorable comp related to Omicron in the prior year. And then in the Q4 comparable ex-PPP was 16% on a combined company basis. So that trend in April looks very consistent with the trend that we saw in Q4 from a gross profit perspective on a combined company basis ex-PPP. And really unpacking some of the trends, what we see is growth in the areas where we are strategically oriented, software and integrated payments versus sidecar, our vertical points of sale. And even in Q1, we saw outsized growth in-person versus online channels, albeit omni-channel more broadly is a key focus for us. We've also seen strength from our banking ecosystem with loans, ex-PPP, instant deposit, and Square Card outpacing overall Square gross profit growth. Now, when we look at the overall sort of growth rates in terms of key verticals, we have seen some moderation, as we noted, since that mid-Q4, mid-November timeframe across certain discretionary verticals, food and beverage and retail. Churn has been relatively stable. Where we've seen a bit of pressure is on the processing volumes at existing sellers, similar to the trends that we noted back in February. Because of the breadth of the overall Square ecosystem, we have resilience because we serve multiple verticals, multiple types of customers, increasingly up market, and obviously multiple business, revenue streams across multiple products. And then maybe to address your international question, we have also seen some strong growth in international. Ex-BNPL, we grew 11%. Mix was about 11% of Square's gross profit, and ex-BNPL grew 28% year-over-year, outpacing overall Square gross profit growth. We're really taking sort of a product-led, product-centric approach to our global expansion, where, again, the key differentiator is the breadth and integration and the cohesion of our ecosystem. And so our priority continues to be driving product parity in these markets. And as we bring new products to bear, look to global launches of those products, increasingly so. In the first quarter, we had Square Loyalty and Square for Restaurants in Japan. And we've also had Tap to Pay launches over the past couple of months across Android and iPhone in the US. So more to come here. And again, our key focus is on these top 3 strategic priorities in driving the Square business forward.
Understood. Thanks, Amrita.
Our next question comes from the line of Harshita Rawat from Bernstein. Please proceed.
Hi, good afternoon. Can you talk about recession sensitivity across the different businesses? So on the Square side, how should we think about exposure to net new business formation, consumer discretionary spend? And then on the Cash App side, are you more exposed to unemployment trends or consumer spending trends given the demographic skew? And then just as a follow-up, can you also touch upon your credit businesses and the sensitivity there to a credit cycle? Thank you.
Sure. Thanks for the question, Harshita. Let me start with saying first, what the work that we do to broaden our ecosystem is, bearing fruit in the diversity of our revenue streams now. In the first quarter, 14 revenue streams at $100 million or more in annualized gross profit across Cash App and Square. Cash App with 6 and Square with 7, along with BNPL as well. And so each of our ecosystems is doing the work to broaden our product set that can serve our customers in uncertain times, and doing that increasingly at scale. We were at 11 revenue streams a year ago, so we've grown 3 new ones while continuing to grow our currently at scale revenue streams. And I think this is really important as we think about our ecosystems driving resiliency through uncertain times. And when we look at engagement on our platforms, we're also seeing that grow through these uncertain times. Cash App, as I noted earlier, growth across each of the various components of inflows. In particular, with Cash App Card, we get to see both discretionary spend and non-discretionary spend In 2022, nearly a third of spend on Cash App Card was for grocery, gas, auto, utilities, et cetera. And with spend per active, average spend per active for Cash App Card growing both year over year and quarter over quarter. So clearly we see through that signals around consumer spend and discretionary and non-discretionary income, along with signals around the strong engagement on our platform. From a Square perspective, we have an ecosystem now of 30 plus products that helps to drive those retentive relationships. And as we shared last quarter, as more customers take on more of our products, that we see a meaningful improvement in retention over time. So our focus there being on continuing to drive product adoption and the breadth of our ecosystem, which drives retention and overall growth for us. Ultimately, the signals that we can read in real time across our key indicators, across both our consumer ecosystem and our seller ecosystem, is what enables us to be able to be agile to the environment and move quickly, addressing our customer needs as well as our own business and how we're able to react. From a lending product perspective, look, I think our core products share some attributes that make them fairly unique in an uncertain macro environment. First, we take a very data-driven approach. Our risk and underwriting models are updated in real time based on a broad set of customer data, both about that individual customer as well as millions of other customers like them. And in fact, some of our core lending products like Cash App Borrow and Square Loans are offered to customers based on specific eligibility criteria where we determine those eligibility criteria. There's also unique structures to these products where we design our products to really simplify access to capital. They're often short in duration and have simplified repayment processes. That's part of the reason that we've seen healthy repayment behavior across each of these different lending types. And as we noted with Afterpay, actually saw an improvement in gross loss as a percent of receivables in Q1, both quarter over quarter and year over year. And finally, we see strong repeat usage. Historically, we've seen strong adoption from these customers with increasing frequency. These are customers we know well and have a history of repayment and have ability, therefore, to better underwrite. So we think those unique attributes of these products that really serve as working capital to our customers are important to note during uncertain times like this.
Thank you.
Our next question comes from the line of Ramsey El-Assal from Barclays. Please proceed.
Hi, thank you for taking my question. I wanted to ask about the Cash App, the savings product, and just wondering if you could comment on just how that product fits into the overall Cash App value proposition, and also just give us your latest thoughts on the product roadmap and Cash App in terms of what types of other adjacent financial services you might contemplate adding or what looks most attractive from here.
Yeah, just some context for everyone. Earlier this year, we launched our savings product to allow customers to hold a separate savings balance within Cash App. We've heard from our community that they want more tools for budgeting and money management. So this is where that came from. And it allows our customers to easily set and track towards financial goals. And they can easily add money to the savings account using their Cash App balance, a linked debit card, or through roundups on purchases with a Cash App card. So far, it's one of our fastest growing products. And while early, we see that it's a feature that can drive a lot more inflows into our ecosystem over time. By the end of April, we had more than 3 million actives that have added funds to their savings balance account. And more than half are saving through roundups on Cash App card. So this is another strong example of how our products across our ecosystems can reinforce one another and actually build on one another. Are you asking more about the general product roadmap for Cash App or within savings in particular? Just clarify your question.
More in general, just other adjacent financial services that might look attractive or any kind of color in terms of the general product roadmap, more so than just specifically within savings. Yeah, thanks.
Yeah, all of our products within Cash App are from looking at these adjacencies, and we started with the the most viral with the greatest network effect, which is peer-to-peer. And that is a base level utility that has a lot of value for tons of people. Easiest way to get into the app and into our ecosystem. But as we look at what our customers are doing and what products they're adopting and what they're more importantly trying to do, that's where our new product ideas come. And I think our strength is really simplifying something that was traditionally fairly complex into something that's very easy. Take our approach to taxes, for instance. So we'll continue to look for more of those, and we do see behaviors today that are interesting, but a big part of our focus at the moment is making sure that the products that we do have are easily accessible and can actually spread, and really focused on providing more opportunities from Discover and from that little search icon at the bottom of your Cash App. This is going to be a launchpad for much of the Cash App ecosystem, and certainly as a way to bring in full bearing the Afterpay acquisition that we made. But it allows us to get more, potentially daily usage as people can find things not just online but also around them that then touches on every one of our financial products and really brings to life those adjacencies. So there's a lot of work to do there just to strengthen those connections and to make sure that we're building something that's robust and we can continue to add more new products and more new features.
Thank you.
Thank you.
Our next question comes from the line of Michael Ng from Goldman Sachs. Please proceed.
Hey, good afternoon. Thank you very much for the question. It was just about OpEx. First, OpEx came in a little bit better than guidance in the quarter. I was just wondering if you could talk about any areas of efficiencies that you may have benefited from in the quarter or timing elements that might impact how OpEx is recognized throughout the year. And then second, could you just talk about how you're viewing full year OpEx growth, any notable areas of investing you're making for the year, and whether there are any change in OpEx plans relative to last quarter? Thank you.
Hey, Mike, thanks for the question. Let me start actually with talking about the full year and our view on profitability for the year, and then we can kind of slice and dice OpEx from Q1. So look, of course, our goal, as always, is investing responsibly to deliver profitable growth. And for the full year, we're raising our profit targets to $1.36 billion on adjusted EBITDA, more than 35% growth year over year, and $115 million adjusted OI loss with improving margins on both. This outlook primarily reflects our strong gross profit growth during the first quarter. On the expense side, we're deferring some of the investments that we had intended for Q1 to later in the year. Longer term, the investments that we're making should follow our path to deliver a Rule of 40 on an adjusted OI basis longer term, given the returns that we see. As we think about what underpins the work that we're doing, the investments that we're making, as I noted earlier, we continue to expect Cash App margins to expand. This is a trend that we've seen this quarter and a continuation of improving profitability over the last few years, while we expect Square margins, which are already healthy, to be more consistent year over year. And we intend to hold to these targets in the midst of macro uncertainty. If we see growth slow, we'll pull back on our planned expenses. The key areas of leverage that we think about across the year are similar to what we noted last quarter, which is hiring. As we see strength in the business, we'll react accordingly, but we are deliberately slowing the pace of hiring. As we shared last quarter, expect to increase headcount in the approximately 10% year-over-year range. And sales and marketing to increase at a much slower rate than the 25% growth we saw in 2022. Now, to unpack some of the quarterly variations, for the second quarter, we expect EBITDA to be lower than the normalized rate that you saw in Q1, as implied in our guidance, given the timing of expenses during the year. And that then brings me to sort of the operating expense growth that we saw in the first quarter. which came in about 60 million and change lower than what we had included in our guidance. And it was really broad-based across our key areas of investment. So sales and marketing was relatively flat year over year. Cash App sales and marketing expenses were up 9%, driven by an increase in peer-to-peer processing costs, peer-to-peer transaction losses, and card issuance costs, but the rest of sales and marketing was down year over year. Product development grew. Primary driver here is our teams and our personnel costs related to engineering, data science, and design. And then G&A down slightly year over year, but excluding certain one-time expenses related to the Afterpay acquisition, also grew year over year with investments in human resources, compliance, and customer support personnel. Risk also grew year over year, but we also now have a full quarter of Afterpay in our books this year versus last year. So these are kind of the key elements that we're focused on operating with discipline across our business, and we'll continue to do that through the year.
Thanks, Amrita. That's very clear. Thank you.
All right, we'll now take our last question. Our final question comes from the line of Trevor Williams from Jefferies. Please proceed.
BNPL folded in. Amrita, with the ex-BNPL monetization rate you gave for Cash App, we were backing into just over 140 million of BNPL gross profit for the first quarter. If you could just comment on that number, and then anything you can share on BNPL gross profit growth within the 24% combined company growth for April would be great. Thanks.
Hey, Trevor, it cut out the first part of your question. Do I take your question to be primarily around sizing the performance for BNPL for the quarter?
Yeah, BNPL in Q1, and then if you could parse out the BNPL growth within the 24% for April.
Sure. Look, I think we'll orient here to the volume-based metrics that we provided earlier, which is 18% GMV growth in the first quarter. GMV continued to grow faster than gross profit in the first quarter, given mix shifts to enterprise sellers and newer markets. So gross profit growth was below this. But we expect GMV growth in the month of April to be up from what we saw in the first quarter, 20% versus the 18% in the first quarter. We're encouraged by what we see here, which is continued growth in high-quality customer acquisition with repeat engagement and healthy repayment rates. We see 98% of purchases not incurring late fees and 95% of installments paid on time, consistent with what we've shared in the past. And of course, we continue our work of integrating Afterpay with our Square and Cash App ecosystems, this combined scale of which we believe will be a true differentiator for us. Within Cash App, unlocking commerce with the Discover tab to drive increased engagement. And when within Square, launching BNPL in person and online, where we've seen encouraging early adoption. We're focused here on using that combined base across our ecosystems to build a strong pipeline of new merchants and to continue attracting new customers, new consumers to our BNPL platform.
Okay, thanks.
Ladies and gentlemen, thank you for participating in today's program. This does conclude the program. You may all disconnect.
Thanks.
Okay. Sorry, I was getting a little distracted there at the end because of this little guy. So I did want to touch up on a couple things. First of all, they were... Sorry, bear with me here. He really wants to go to this window. Usually I have the window open and he jumps. Yeah, the cat loves block. Cat loves block. Cash App specifically. I find it funny though. Like one of the things that they said, how Cash App for Business is sort of cannibalizing their own Square marketplace. It's kind of funny. And is the company big enough for them to actually see something like this? It's kind of crazy. Whenever we were looking at Just trying to switch over. Someone asked if Cash App will get $1 billion in gross profit next quarter. Absolutely. Well, not absolutely, but I would assume so. If we're looking here, it's gaining at about almost exactly 70 million per quarter whenever it comes to Cash App's gross profit. All we need is another 69 million, and there we go, right? Very, very exciting. Oh, thank you, Lincoln. I appreciate it. Adjusted EBITDA is really where it smashed, though, beating out expectations by 38%. So that's really what we're seeing. If the stock is going to be gaining, it's going to be from the adjusted EBITDA. What my concern is like with Block, and now I still am a fan of the company. Okay, so I don't want to get too negative, and I find most times I actually talk more negatively about the companies that I hold than positive, because I try to find the cracks where they might lie here. The one for Block that I consistently find, and they want to, spread out their different earnings, whether it's through Tidal or Afterpay or whatever, Jack Dorsey likes to do. I hate that sort of stuff. Okay. I find that the biggest problem that I have with Block is their acquisition strategy. I find it not good. I find it doesn't help. And Afterpay is always this one that is so, we're too early to tell if what's happening at Afterpay is cyclical or not. What? Thank you. But I don't know if it is cyclical or not. Even then, even if it's from Q1 to Q1, it's still only a 3% increase. Oh, sorry. You guys can't see my, that's the side I want. So, that's sort of the problem. So even if we disregard that it's down from Q4, which could be a large spending, category, because obviously, it's holidays, everything along these lines, even year over year is only 3%. Even though they spent, at the time, $29 billion, a lot of that was, stock. So really, some estimate it to be around $10 or $11 billion. $10 or $11 billion for $95 million worth of gross profit in a single quarter. Not a fan of that. you know what I mean? For 3% growth over time, comes with a myriad of new challenges, whether that's, people not paying back, the actual products. They said that part was actually doing good. 98% of consumers aren't even getting to late fees. That's definitely a positive. It's a lot of money. And this has been the same way for whether it was them trying to get into Caviar or Tidal, and now there's just too many businesses. Spiral, TBD, Tidal. It's too much. I'm not a fan of that strategy at all. I like a little bit of focus, and Cash App should be their focus, and it is becoming their focus, as you can see, because we're talking 2 quarters ago, Cash App and Square were tied in terms of gross profit. Today, it's a massive difference, and it'll probably continue to expand. The cannibalization is a little bit weird, though. That's a little bit worrisome, because I'm sure that even the profits for Cash App for Business are much, much smaller than the Square, because not only is it payment processing, but it's also subscription, these sorts of things that can, greatly benefit them. It's the same thing for PayPal or any other payment processor. Whenever you look at, PayPal's main business seller, that makes much, much, much more profit than Braintree or something like this. And it's funny because Braintree starts to cannibalize those larger businesses, and it's actually lowering, their take rate. So we'll probably even see that in Square. But then again, this comes with the cost of being the fastest growing, finance app on the App Store. A place where you can put out a product like a savings product and have that be some of their fastest, products that Cash App can put out, massively increase inflows and these sorts of things, which then, once you actually bring them in, well, then they need to monetize to get out, if that makes sense. Like you're going to be spending, or you're going to be doing instant transfers or something like this. So seeing that massive gain, 8% quarter over quarter on Cash App's inflows, is super, super great to see, because then that leads to large benefits down the line as well. Even looking just a year ago, whenever we had 46 million, Cash App monthly transacting actives, 33% of them had cards. Okay, so this is the amazing thing too. Cash App card monthly actives, as you can see in this chart right here, not only are they gaining like crazy, but they're gaining market share on their own customer base at 38%. That's absolutely amazing. I hope and I pray that SoFi can get that business. If SoFi gets that business, guys, that is a instant 20% gain on SoFi stock. I mean, honestly, it would add over $1 billion of new revenue or something. Throwable would know more than me. He actually is the one that told me that. So I just saw that he was in the chat. So maybe he's still here. You can shed some light on it for us. What else did they touch on that I wanted to speak on? Yeah, growing up market and getting a little bit of an ecosystem here. I thought that was really interesting, where they spoke about how they're really creating a niche in the restaurant and fashion space, right? Designer space. That is very, very beneficial, right? If you are a seller, whether online or I mean, it works more in stores or something like this, where you can see that your competitors use a certain system, then you're just going to not even shop around that much. Okay, Square is the thing that we use. That's what we use as restaurants or these sorts of things. That can be very beneficial. So having that niche can help them grow very, very much. And then it's just about going global, and there's like e-commerce is an endless total addressable market, especially whenever you're small in the market. So exciting, but that also has to translate into real numbers as well. For example, Square's ecosystem, yes, things are gaining, quite excitingly, but we saw cost of revenue drop. And wait, sorry, I want to make sure that I have the right. Bear with me here. No, that was last year. Yeah, 770. Okay. I'm wondering if I don't know why that says 670, because that shouldn't be true. Maybe it is. Maybe they did gain 15%, but the math is not adding up to me. Yeah, it says 801 here. 801. I'll have to check that number. I wonder how I got that number. Yeah, because 801 would make a lot more sense. If, for example, we were to go back and yeah, so it's literally just adding all of it up. Okay. I don't know. Okay, whatever. Bear with me here while I just double check this. Oh, okay. I got you. Okay, sorry. That's I'm showing Square's gross profit minus the Afterpay acquisition. Okay. Because I was wondering, I was like, I've never seen this before, but I was just hiding two of these statistics. So this is actually the gross profit number minus the Afterpay Square contribution. So the actual Square contribution would be the 95 million, yeah, 47,628,000. So once I actually add that, but I just hide it because it's easier to look at. But then I also have to remember, what I had set up. Okay. Bear with me here. Yeah. What did you guys think? Throwable actually just said something in that thing. Yeah, Block generated 74% of Marqeta's revenue last quarter, annualizing $750 million in revenue and growing fast. Isn't that true, right? Cash App's their best business. Marqeta is basically a Square proxy at this point. It's true. And even their stock is up because Block is up, right? It's so funny. But if they lose that contract, it's going to be bad. That is not going to be exciting. I mean, it might be exciting for me. I don't hold Marqeta. They're a direct competitor to Galileo. I sure hope, SoFi could get that business, because not only do I think that we can make a better product for Cash App, but also like Anthony Noto knows Jack Dorsey quite well. Speaking of which, I also wanted to show you guys this just really quick. I know my brain is all over the place right now. Anthony Noto, by the way, talking about SoFi, might already be in talks with Jack Dorsey. Obviously a stretch. He just bought another 50,000 shares. 50,000 shares, not $50,000, 50,000 shares of SoFi Technologies. This is why I'm so bullish on this company. Not just because he's made the one purchase of 50,000 shares, but because the man has purchased over $10 million of this company in the last 12 months. Over $10 million. That's over 10% of his net worth, making it roughly around $38 million of his total net worth, which is roughly estimated at around $100 million. 38 million of it is in SoFi Technologies alone. For him to continuously put out another 10 mil just in the past 12 months is a massive bet. This is why I'm so bullish on SoFi. And if things like Cash App can actually, sit down with Anthony Noto, take up the idea that not only can they be the payment processor, be the actual sponsoring bank to hold the money if they even need to as well, also be the issuing bank to issue those cards out to customers. There's so many things that we can do to support Cash App, let alone even help with cloud infrastructure and these sorts of things, like the actual processes on the back end. That's what SoFi does. They're also a competitor as well. However, not directly competing with Cash App necessarily. I mean, they are, but most of the customers that both Cash App and SoFi are getting are both from incumbent banks. That's really the enemy here. The enemy. So, yeah. And not only to mention, because a lot of the things of what makes a bank is that they have the regulatory licenses. Block does not have the privilege of actually taking customers' money. They are not a bank. Okay, a lot of people think that they've gotten a bank charter. They have, but it's not the same thing. It's not a nationally chartered bank. It was only for their loans. Okay, so not the same thing as actually holding customer deposits. The thing is that SoFi does. They do actually have a nationally chartered bank. Very, very rare these days in the fintech world. Only about SoFi, Vero. I can't even think of a third one. It are neobanks that actually have fully chartered licensed banks in the United States. And then, guys, not even to mention, Nubank and these sorts of things taking over in the neobank space in Latin America. Guys, obviously everyone is super proud of their portfolio, but honestly, I could not be happier with the portfolio that I have today. Investing in tech and growth stocks. Like, my portfolio is down, don't get me wrong, but continuously during really, really hard times, seeing stocks like this continue to put out great numbers and growing like growth stocks do are exactly why we're investing today. It's for me, it's two things. I'm trying to visualize the future and see, okay, well, where are the least amount of frictions, most amount of profitability, where are the customers going to go? And a lot of it is choosing based on, where do I go? Can I use the products that, other people are using? I do the same thing for, my job that I'm in, or, even here on YouTube. I think, what would I want to hear? And then it's the nitty gritty of actually breaking out the spreadsheets and going, okay, but do the numbers represent what I'm actually seeing? Sure, anyone can paint the picture of lemonade being the future of insurance, but if the numbers don't stack up, then maybe it doesn't happen. I heard that they had a great quarter. I don't follow them very closely. But the same can't be said whenever I talk about companies like SoFi, Block, Melly, Shopify, Nubank, all of these fintech companies, which are just the total addressable market is so big because they're eating away at an industry that hasn't been touched in years. And yes, I mean, Yes, there's been people that have come in like PayPal and stuff, and they've been doing this for a while, but they haven't been able to offer all the products that these banks are able to offer today. It's so interesting. Philip said it's good to not be a bank right now. You know what? In a way, yes, because you don't have the panic. The thing is that if the deposits are still growing, like SoFi, for example, you get this disconnect where, people are scared, but it's like, should you really? Because whenever you look at the numbers, they're still projected to grow another $2 billion in deposits this quarter. When all the panic is going around. Hello? Okay, you can hear me. How about now? It looks like it's back to normal. Let me know if that's the case. If so, I don't even remember what I was talking about. But yeah, I just think there's so many investors, and I'm sure there's a lot of you on the call right now that think or associate market cap with a healthy company. Okay. And this can be a dangerous thing because it really does not. And whenever you're investing, or at least me, I try to look for alpha, the idea that the company's growth trajectory or their actual intrinsic value is separate from where the market thinks they're going, right? Then you can actually, invest and make a lot of money. And that's just simply on the short term as well. Like beta would technically be a little bit more on the long term, as if they continue to trend that way. But pretty much what I really like about SoFi as well, while we're just on this, I know this is a block call, but I'm just on this sheet right here, is that the stock did an amazing quarter. No one can argue that. If they've actually looked at the numbers, it's very hard to argue that they've had a bad quarter. Some people can say that the tech is having an issue. Some people can say that maybe their credit portfolio is just getting a little too big. Sure. Aside from that, okay, there has been a lot of great things, in my opinion, that how do you say it? Outperforms the other risks. In that sense, let the market cap go down. Okay. That's where, great investors get tons and tons of deals. Now, the thing too is that you have to separate the difference between a falling knife, like a company that's going to continue going down, and one that is just, getting a little absurd. But that's why we track the numbers, right? That's why we look at the health of the company, which whenever you're looking at SoFi, their cash balances are getting stronger and stronger all the time. Same thing for Block and everything. Like disregard what's happening with the stock price if you guys are net long-term buyers of these companies. And should you be long-term buyers of the companies based on market cap or performance of the company? We want to be company owners, and that's it. Like everyone listens to those Warren Buffett chats and then doesn't follow through. Why whenever looking at SoFi's numbers, seeing the market cap drop down, even though whenever we actually saw the numbers, the stock was up 8% and then later it falls 30%. What scares you about that? You know what I mean? That sounds like, wow, I'm getting a really great deal. What are people not seeing in this quarter? Okay. And then there is a little bit of ignorance to that too, where if you're not reading the full quarter, you're not reading everything, then yes, there can be ignorance. And then you know what, you do what I do, and you surround yourself with a community of great people who do tons of due diligence. Now, what I want to do personally, for the people that watch the SoFi Weekly or whatever like this, I want to switch it to the FinTech Weekly. I know SoFi is a great company. There's a lot of great companies, okay? And a lot of them, I find, are in the transition from incumbent banks to, digital FinTech companies like Cash App, like SoFi, like even PayPal. I know PayPal's not as much of a growth story, but it still has a lot of growth to go because it's a large transition from cash to card, There's let's get a community of people who can do this, like tons of DD. Guys, I'm telling you, these spreadsheets that I've been working on are crazy. Block is a tiny portion of it. And then, Coinbase, another one, very, very small. It's the SoFis, it's the new banks, it's the Melees. These ones are the ones that I've been pouring a ton of time into. I've got, another 10 days or 11 days before I actually launch the spreadsheets. I hope that it really, really helps the community's DD going forward. Updated quarterly every single time, and then also adding new things as we change the way that we look at the companies. If, for example, the way that SoFi, the way we started switching and looking at loan portfolios, I added that into the spreadsheet, and that'll continue. Once you actually get the spreadsheets, you only need to get it once, and then you have it forever. I'll be updating it forever. So, very, very exciting. Let's continue to do tons of DD, make great purchases in companies or at least that's what I'm doing with my portfolio. Not what you guys should do. And I believe that's long-term in technology companies. Let me take a look at a couple stock prices. Actually, let me see if I can just switch here really quick. I haven't been able to edit that actually. Can I do that? Okay, just taking that away, I mean, honestly, it doesn't change anything. Okay, whatever. Where is it? Square. Up 1% after hours. It was much higher before, and then I guess it just sort of leveled out a little bit up. Marqeta should also be up a little bit. Yep, it is. Like Throwable said, it's just a little bit of a proxy for the company. So although they might not even have news, just the idea that their largest customer, which makes up the high majority of their entire business, is doing well, that's good news, right? Larger market share in the Cash App cards means more market share for Marqeta if they can keep the thing. Coinbase, another stock that I just quickly jumped into and looked at, up 8.4%. Another stock that I hold. This is one that I don't talk about often. I don't think it'll be the greatest pick of my portfolio, but it's one that I have a small speculative position on, and I probably won't sell it for a long time unless, the SEC just completely shuts them down. In which, whatever. Small position. That's my lucky 10x right there. Thrown for the fences. Throwable said, Melly is fire. E-commerce and fintech in an emerging market, sign me up. Yeah, not only that, right? Logistics, advertising, credit portfolio, all of the things that you want, like all of them in such an emerging market. They even spoke about it on the call, I think, on Block's call. They spoke about how Africa, Southeast Asia, and Latin America are where they want to be. They want to position themselves to be large winners in these geographies because the total addressable markets are just booming, right? And then think that you can natively buy, you can buy native companies that are already there, that understand the culture, the localization, the languages, Nubank, Melly, maybe a little StoneCo as well. I think StoneCo had a good day today, and I said that I sold them recently, which I did. Yeah, good for them. Good for them. What else? Anything else that you guys want me to cover going forward or even currently right now? I also wanted to see if Apple had brought up anything about the high interest savings account. Hopefully you guys saw that video. Tanner, have you seen my video, Manson? Okay. I'll try to find that to see if they said anything. Kathy Wood's favorites are doing well. Yeah. Yeah. I don't follow DraftKings, so I literally don't even know what price it's at. I don't care about that industry. I don't know how much it's going to gain or lose. Just like gambling, I mean, in general. I mean, maybe the transition to online gambling sounds like a total addressable market that I could get behind, but I don't. It's so funny that I always say this. People are like, your favorite thing in the world is stocks and all these things, but I've never gambled. Like, I don't gamble. I don't, never bought a lottery ticket, never done any of these things. I've been to a casino once. It was to see a comedy show. The truth is that I just totally, I don't like chance. I like stock investing because I could put the odds in my favor. I mean, if I could be the house in a casino, yeah, sure, I would take that bet. You know what I mean? But in gambling, I feel like I can't do that. So, like I said, I don't think I would invest in a company that I wouldn't use myself too often. I mean, I've probably broken that rule once or twice. Palantir. I don't use Palantir very often. But no, I mean, it depends. But just in that industry, it's up 9% after hours. Wow. Okay, cool. Cool. Oh, maybe I'll buy some. No, just kidding. Yeah, so I think I'll probably call it there. I really appreciate you guys, but we covered most of it. Oh, the cat wants up now. All right, Lincoln, come say bye. Okay. All right, guys. Thank you so much. Really, really appreciate all your time. If you haven't already, subscribe, stick around. I'll do some more live streams depending on if they're in my things or in my, portfolio, or if they're in the industry, if they compare to SoFi, Block, any of these companies, I'll then watch the live streams. But yeah, aside from that, say goodbye, Lincoln. All right. Thanks so much, guys. Really appreciate your time. Check out the links down below. Really appreciate it. Appreciate all your support. People that stick around. I notice all the names that are recurring.